Hello and thank you so much for joining us on Business Now, where we take you through details of financial happenings within the country in the last 1 week. My name is Chinaemerem Joseph. On this edition, we will be looking at a number of issues that have continued to weigh the growth of the nation's economy rarely down. The COVID-19 pandemic has continued to spread across the world. Some countries are at their worst moments. Some others, fortunately, have few cases and have also few mortality rates, while others have gotten to their peak and activities gradually returning to normal. In all of these, the world economic outlook for the year 2020 has been badly hit, with the International Monetary Fund projecting a -3% growth rate. Now, this figure certainly paints a rather worrying picture of what the nation's economy will look like once the pandemic has been contained. The price of crude oil has crashed badly, and two economists would explain to us the implications for Nigeria. Also, the National Bureau of Statistics released a report on the inflation rate for the month of March, and the figures are still climbing. These and more will form the fulcrum of our discussions on the program. Just before we go further, let's stop briefly at the newsroom to share some developments with you. And in the news now, the Organization of Petroleum Exporting Countries, OPEC, daily basket price stood at $14.63 a barrel, now compared with $14.19. This according to OPEC Secretariat calculations released on Wednesday. Also known as the OPEC reference basket of crude oil, the OPEC's basket is the weighted average of oil prices from different OPEC members around the world, and is used as an important benchmark for crude oil prices. It currently averages the oil price of 13 countries, namely Algeria, Angola, the Republic of Congo, Equatorial Guinea, Gabon, Iran, Iraq, Kuwait, Libya, Nigeria, Saudi Arabia, the United Arab Emirates, and Venezuela. Meanwhile, the price of crude oil completely crashed a few days ago, leaving countries like Nigeria, who majorly depend on proceeds generated from it for survival. Just a few weeks ago, the federal government reduced the crude oil benchmark price in the 2020 budget from $57 per barrel to $30 per barrel. Unfortunately, the outbreak of COVID-19 and its attendant effect has obviously worsened the situation. Professor Ken Ife, an economist, and Ezo Nyekbere, a financial analyst, spoke to us on the implications for Nigeria.
The oil case is a tragedy, and there's an accident waiting to happen. And everybody knows that it is going to happen one day. But nobody ever felt that it could happen the way it happened yesterday. That the price of the crude dropped to $18 to $5, down to -$37, which means you are actually with your tanker looking for somebody to pay to carry the fuel from the crude from you. It's unbelievable. It's unbelievable. That tells you why we should be ashamed that we are not processing our crude. If you are refining your crude, you do not need to carry this crude away to go and sell.
Another thing we should be really worried about is our source of generating revenue. For a very long time, crude oil has been so we've been depending on it to raise revenue. What areas would you be advising government to really turn their focus to now, considering the fact that we've talked so much about diversification of the nation's economy?
You can increase revenue, but you can also reduce cost and then reduce waste. That also amounts to increasing disposable revenue. When you reduce the cost from blocking the smuggling across the border, which means you don't collect the tax, you reduce the cost of governance, which means your outgoings are reduced, and then you now come round. Increased taxation is going to be more difficult now, because this is not the time you increase taxation.
What has happened to us may have brought some difficulty, but for me, I look at opportunities and the glimmer of hope is a blessing in disguise, because in the international community, they are all countries have set timelines for the elimination of fossil fuel-fired cars using petrol and diesel from Britain. Even if this thing doesn't happen today, in the next 4, 5, 6, 7, 8 years down the line, these things will crystallize and will be left in the lodge. So it's a good warning. That's where knowledge, leadership based on knowledge comes in.
And still in the news, the National Bureau of Statistics says the Consumer Price Index, which measures inflation, rose by 12.26% year-on-year in March. The Bureau in the Consumer Price Index report said the 12.26% inflation for March is 0.06 percentage points higher than the 12.2% recorded in February. This is the highest inflation rate to be recorded by the economy in the last 23 months. Now, the last time the index was as high as this was in April 2018, when the inflation rate was put at 12.48%. The report said the lockdown in Abuja, Lagos and Ogun states, which started in April, and various major disruptions in normal economic activity in several states would not have any major impact on March inflation, which the report focused on. And on a month-on-month basis, the Bureau of Statistics said the index increased by 0.84% in March. This is 0.05% higher than the 0.79% recorded in February. Meanwhile, an economist, Professor Ken Ife, has again advised the federal government to direct its interventions to the provision of sufficient consumables, as the price of food items are expected to rise further. Professor Ken was reacting to the marginal increase in the inflation rate for the month of March amidst battles to contain the spread of coronavirus.
I expected that the panic buying at the end of March would have been picked up. But apparently, it may well be that they have collected the data just before the end of the March panic food buying. But nevertheless, in the next one we do, generally there wasn't a big rise. It was just a marginal. And that marginal rise is across the whole sub-indices. The food sub-index basket, which is the one that actually tracks the inflation up, has also shown a very marginal increase, very, very small. But that is going to be very pronounced when the April figure is measured. We are talking about events in Lagos and Abuja and a few other places. These are where the two regimes of lockdown are very serious.
The way things are going, we're wondering what steps government should be taking or should have taken before now, because we've observed continuous rise in the inflation rate. So considering the lockdown that is going on now and plus other indices that have not really been good, what would you be advising both the monetary and fiscal side to do to ensure that this rate is somehow moderated, at least for now?
Well, the thing is now down to logistics and transportation infrastructure to be able to deliver food where they are needed in market locations. But they have calmed down on the interstate movement of food. So that's the movement of people that the government is against. The critical thing has been in managing the reopening in such a way that it doesn't disturb the supply chains, so that it doesn't turn into a major crisis.
And away from that, as countries around the world strive to contain the coronavirus outbreak, the International Monetary Fund has projected that global economic growth will fall to -3% this year. Now, the IMF chief economist, Gita Gopinath, who announced this during the virtual spring meetings in the United States, said the pandemic had resulted in a global cumulative loss of around $9 trillion. The International Monetary Fund and World Bank 2020 spring meetings have kicked off in earnest. This time around, there is a shift from the norm as coronavirus continues to hit countries around the world, including the United States, venue for the meeting. Meetings are for now held virtually. It is not a good time for a number of member countries as the pandemic has taken its toll on their economy. IMF has just done a major downgrade of its global growth forecast from 6.3% to -3%. Now, the fund clearly says this projection is only if the pandemic recedes in the second half of 2020, otherwise it could get worse.
The fact that growth will be in negative numbers is not in doubt. The economy is shut down, nothing is happening, even governmental service delivery is hardly taking place. All that is taking place are efforts to curtail the pandemic, the coronavirus pandemic. So it is not rocket science. It doesn't take any special art to know that the economy of the world, and Nigeria particularly, will contract.
The IMF adds that the pandemic has already caused massive job losses, widespread firm bankruptcies, and huge financial strains this year. It, however, projects that if the pandemic fades in the second half of 2020 and affected countries deploy effective policy actions, growth could rise to 5.8% in 2021.
We must devise a mechanism, just like the President said in his last broadcast on the 13th, about the necessity for the Ministry of Agriculture and some other agencies to sit down and advise him. Some firms may not be able to pay salaries within this period, and that's where you have, in other countries, they've developed packages where the government is coming in to assist.
To the fund, the lockdown of economies around the world appears worse than the 2008 global financial crisis, but gradual recovery is expected in 2021 and might only be partial as the level of economic activity is projected to remain below the level earlier projected for next year. And then, barring any last-minute change in plans, the disbursement of the first tranche of the Central Bank of Nigeria's 50 billion naira targeted credit facility would begin this week. The fund, which is being managed by the Nersal Microfinance Bank, has received over 80,000 applications. The managing director of Nersal Microfinance Bank, Abubakar Kure, confirmed the development in an interview with journalists. Well, Kure, who did not provide the amounts to be disbursed in the first tranche, said that those whose applications were successful would start receiving their fund this week. The CBN had introduced the 50 billion naira targeted credit facility as a stimulus package to support households and micro, small and medium enterprises affected by the COVID-19 pandemic. The 50 billion naira intervention is being financed from the Micro, Small and Medium Enterprises Development Fund. Now, in terms of limit, the loan amount would be determined based on the activity, cash flow and industry size of beneficiary, subject to a maximum of 25 million naira for small businesses. And now the capital market community has launched an initiative with the aim of raising 1 billion naira within the shortest time possible in a bid to support the fight against COVID-19 and its impact on the Nigerian economy. This was stated by the Acting Director General of the Securities and Exchange Commission, Mary Udok, in Abuja. She said the funds would assist in cushioning the effects of the pandemic on the poor and vulnerable in the society, as well as providing some critical medical supplies. She said that the committee has commenced work and has set a target to raise a sum of 1 billion naira from market participants and stakeholders within the shortest time possible. Now, lastly, in the newsroom, transactions on the floor of the Nigerian Stock Exchange witnessed another drop in share prices as bears sustained their grip on the local bourse following profit-taking by investors. The local bourse recorded only 4 gainers against 27 losers led by Champion Breweries PLC and Owando PLC, among other blue chip firms that experienced downswing in their shares. Consequently, the all-share index dipped by 815.91 basis points, or 3.3%, to close at 22,629.92 index points, as against 22,920.41 points recorded the previous day. Market capitalization of equities depreciated by 152 billion naira from 11.945 trillion naira the previous day to 11.793 trillion naira, as market sentiment remained on the negative territory. And that's all we'll be taking from the newsroom for now. We'll go on a break, and when we return, we'll bring you details of a consultative roundtable organized by the Central Bank of Nigeria with stakeholders from various sectors on how to grow the nation's economy. To join us again. Thank you so much for joining us again. And moving on now, business tycoons, economists and Nigerian ministers, including Zainab Ahmed, that's the Minister of Finance, Budget and National Planning, Mr. Rotimi Amechi, the Minister of Transportation, Mr. Babatunde Fashola, the Minister in charge of Works and Housing, were part of a consultative roundtable organized by the Central Bank of Nigeria. The event was themed Going for Growth. Now, participants at this event called for more seriousness in handling diversification of Nigeria's economy as the spread of coronavirus moves across the world, crippling various economies.
I welcome all of you to this second consultative Going for Growth roundtable session. In June 2019, the Central Bank of Nigeria participated in the first roundtable session, where I had the opportunity to share my thoughts on the economy, as well as receive input from key private sector participants in Lagos on ways in which we could promote greater economic growth for our country. I note with delight that some of the recommendations at the first session have been implemented by the Central Bank of Nigeria, and these have contributed to the successes we have recorded in improving access to credit for Nigerians in 2019. Following the success of the first session, the management of the Central Bank of Nigeria decided to convene a second session in Abuja, working in partnership with key stakeholders in the public sector. And I say this is a real time to hold this, and like we all know what is happening today in the world. I therefore have no doubt in my mind that the caliber of people from both the public and private sector gathered here today, we will make the desired progress in generating ideas and solutions that will enable greater growth and development of our country. In areas that we have in improving processing of foods from just primary agricultural products even into primary sectors. Given the impact, given the impact of coronavirus, I hear some countries are even decided that they will ban the export of even pharmaceutical drugs out of their country. So at this time, what do we do as Nigerians? The CBN wants to put it on the table to say, yes, we will now begin to look at our pharmacists and pharmacologists and say that it is high time they stop becoming dispensing people in hospitals. Then they will now begin to practice or begin to do what they really studied in school, the formulation of drugs, and the development and establishment of pharmaceutical industries will now begin to play a major part in our intervention activities.
The expression or definition of crash, the market crash. When you hear about market crash, usually, is coined for the financial sector, for the financial markets. Nothing else. Economies can crash particularly, but you don't refer to economies that haven't crashed. It's the financial markets, which drives everything. Ladies and gentlemen, we do know that after Black Monday, all the world financial markets, Nike, New York Stock Exchange, and so on and so forth, London Stock Exchange, they all, Singapore, Nike, Japan, they all crashed. Worse than they had been since 1991, the Gulf War. So what does that mean for Nigeria? It means we are not insulated from the world global financial markets. We certainly are not. We now know we are part of the global market. In Nigeria, the Nigerian stock market equally crashed. In fact, the stock exchange had to stop trading on 2 occasions on the Black Monday. They have to reset trading again. This is very normal when there is unusual market crash. New York Stock Exchange, NASDAQ, Singapore. Globally happened. That also happened a few years ago when the rupee, the Russian currency, also started to give way. They have to stop the market. So it had happened in Nigeria. What do we do? Now that we understand what the financial market is, so you could see why it's imperative and very important, the role that central bank, the apex financial institution, plays in the financial markets. Very important. It's not just the regulation of banks. Central bank of any country is also the custodian of the financial resources of the country.
Since when I got to Lagos in 1979, people have been talking about diversification of Nigeria's economy. How do you diversify your economy? You have to diversify your economy and make it great through agriculture and manufacturing. Manufacturing actually, creates a lot of jobs, creates middle class, and also transform countries. These are the areas that I think we need to really focus on. But, how do you diversify an economy? I'll go into manufacturing that makes sense and also makes it inclusive growth. Then you need to actually do what we call backward integration or import substitution. Our economy is great because we have a local market. Because when you look at it, the economy of Asia is mainly focused on export. But we have a domestic market. This is a country with about 200 million people, apart from the rest of the ECOWAS market, where our imports last year was almost $47 billion. It is not sustainable. We cannot have 200 million people growing at an average, population growth at about 2.7%, and then we're importing most of the things that we're consuming. I think we need to really, this time around, be more serious so that we just don't keep talking about diversification. It has been very elusive. I don't know why. It is possible, but people are not really focusing on that. So I think we need to really look at, okay, fine, how do we fully this time around, the kind of people that I've seen here, I'm sure we'll find solutions as to how do we actually make our country to be producing things that we consume. Because if you look at it today, with the kind of projects that we're doing, we're importing almost every single thing apart from few iron roads, which is a pity. We don't have steel industry, we don't have business. So entrepreneurs like my big brother here, Jim Ovia, you have to diversify also and leave a bit of banking. And we need to look at this. Are these things possible? We need to look at reducing of cost of doing business. Cost of doing business can actually affect everybody.
80% of insecurity in the Gulf of Guinea happens nowhere else other than Bonny. They took 19 persons that they won't die, all foreigners. And we are spending a huge amount of money. So if you look, when I was governor, the American government visited me and said that the Nigerian illegal bunkers are the 7th largest producers of oil in Africa. I quote, American government visited me as governor, and that they make $7 billion a year. Imagine if that money comes into our coffers. Then there will be more money to award more contracts to do more infrastructure. Then the contract as an NPC award. It is only in Nigeria where you have a company on its own set up self-anchorage area and ask vessels from outside the country to go there as against the seaport that we have in Nigeria. So all that is going to stop very, very soon. The equipment have arrived. We have 2 vessels. We have 20 patrol vessels. We have 2 helicopters. We have 2 fixed-wing planes. And where we are now is the due process for the local aspect of it. After that, they will launch. But they finish training the soldiers, they finish training the naval personnel, and all that. Are we going to have more crises? Yes, because a lot of those who make billions out of that, this business will be out of work.
So when your crude oil sells at $30 and you are dropping it by $8, it means that in the market, you are selling it at $22. And that's a huge problem. And that can be tolerated by some production environments, like Saudi Arabia. Their average production cost is about $4 or $5 to the barrel. You can't do it here. Today, the best of our processing, our production system make at $17 per barrel, $15 to $17 per barrel. So when you have crude oil in many jurisdictions, not just our country, I don't think it's only here, there are many countries which cost of production is at least $30, and we're one of it. So when crude oil goes to $22 and you are producing at $30, you are out of business. It's very over. You don't need to be an oil and gas person to know that you're out of business.
Let's now bring you some graphic details of business transactions within the country. It's here we wrap it up on Business Now. Thank you so much for your time. Don't forget to join us again, same time next week. My name is Chinaemerem Joseph.